Hi everyone, so welcome to Investing with Value. So this is a stock on demand. It's called Guardant Health, and I was asked if this was a fairly valued stock. So let's look at the valuation. It's a $7.8 billion valuation, and the share price is going for $83. So the recent quarter that's been available, its 3 month was 52 million, up quite a lot from the 18 million last year, and roughly about 188% increase. So that is a massive increase. Like you look at many stocks and you won't see them grow by that percent. So it definitely stands out. The growth rate definitely stands out. And we go to 9 month. It's 123 million up from 50 million, and that's 146 percent increase. So quite a large increase. Though we have to look at the losses, and for the 9 month it was 56 million, slightly down from the 65, though still a pretty decent loss if we have to look at it that way. So what does this company do? This company kind of tests your blood for, say, like cancer. So like if you've got like certain types of cancer, they can test it by taking a blood sample and testing how advanced you are, and then from there they can actually find the right treatment for you. So these guys can be quite effective for you. Like when I was going through the research, a lot of people kind of compared this to was the company Theranos that was run by Elizabeth Holmes, where she kind of like did a little blood a pinprick of like blood, and then they could test everything. So a lot of people kind of thought, hey, this kind of sounds like a similar type company. Is it a scam? Like, doesn't look like one. Like, it looks pretty legit. But we never know what's behind it. But of course, there's a lot of like testimonies of people that have used it. And again, they're not saying we're gonna just prick your finger and then test your blood. These guys will actually go, all the way to test your blood. So there's nothing too difficult in terms of like getting the blood and all that. But the fact that but the testing of it, and then being able to diagnose what stage of cancer you have, and giving you the right treatment, that can make quite a difference in terms of giving you the right treatment. So I was looking at this company, and by all means, like it's kind of like healthcare. Like healthcare type companies kind of sell at a high premium, and also like it takes a long time to perfect what these guys do, and they've also got a nice pipeline to test other cancers and all that. So like looking at this valuation, like it kind of made me think about a company, like one of the companies that you would know very well, and that's Beyond Meats. Like Beyond Meats is also coming around this 8 billion valuation, but Beyond Meats is also growing at around about like 200%. Might be a bit lower next year, but Beyond Meats was about close to 300 million revenue, and they were almost profitable. So like if we compare that, like these guys are probably looking about 160, 170 million. So almost half the revenue of Beyond Meat, except they're losing a lot more. So if you gave me the choice of whether I would invest in Guardant Health or Beyond Meat, like at this valuation, I'd probably invest in Beyond Meat, especially since they're profitable. And yeah, like I think given the valuation, like for me, like I find Beyond Meat expensive right now, and I also would say I find this pretty expensive. The stock has come down. Like last year, it came down to around about the $60 mark twice. So coming down to that price, it kind of helps like lower it a little bit, but that's like around about a 25% decrease, which still would have been like around about that $6 billion mark, a $6 billion mark for this company. I just don't think I can justify it. Like I can see where the valuation is coming from, but it's pricing a lot of success into the stock. But of course, it's healthcare. The product takes a long time to build up, and of course they might have patents on their products, so that they would be, like they'll be able to grow quite well in the future consistently. But I would say Beyond Meats can also do that as well. I would say like if we weren't comparing it, maybe like healthcare, it's a like for like company, but still high valuation. For me, like I'd say, yeah, like money is money. Like if you put your money here, you put your money Beyond Meat. I'd say you have a better chance of seeing an increase on Beyond Meat than you would of Guardant Health. So like that's kind of my view. Like you might be saying, oh, I should compare this with another healthcare company, but like for me, I don't look at it that way. I look at it as how fast is this company growing, and how much profits are they going to get in the future. And so far, this loss is pretty big, while Beyond Meat is looking at a really profitable future. So when you compare that, it's quite a different story. They do have enough cash to last them probably a few years, but that's like I don't necessarily see this as being great value. Like, and I know like the person that also asked me, they didn't see that as being good value and they didn't understand it. And yeah, like you're very fine to not understand it. Like, not even I can justify this valuation. Like, if I brought this stock, I wouldn't necessarily say I brought at a really good value. I'd definitely say I overpaid, and there's so much success built into this pricing, that if something was to go wrong, if we were to have a recession, yeah, I don't think so. Things would turn out very well. Like you might ask me what kind of pricing I might see this at. Like in terms of pricing, like if this came to about a $3 to $4 billion mark, I would give it some consideration. If it came to a $2 billion mark, yeah, I'd be interested at the $2 billion mark. I don't think it'll ever come down to 2 billion. It might come down to three, possibly four. Like even four's probably, yeah. Like I'd say it could come down to 4 billion if something dramatically happened. Market just had a big recession, or maybe something happened with the stock that just caused this massive sell off. But apart from that, like it's very difficult to justify these numbers. These like they're still getting in like 100 million, close to maybe 200 million mark next year, like this year, going forward. But it still is very difficult to like value that. Of course, you might want to look at what's their like addressable market. If the addressable market that is actually quite large, then potentially these guys can just keep growing and keep growing. But the question is, can they keep growing at that rate? And I don't think they necessarily can. But like we would have to see. Like that's the thing. It's a difficult question. Like if say like next quarters, they're still matching this growth rate. Maybe they're showing some really good signs that they can keep this going. But even then, like I'm still very hesitant. I wouldn't say you would want to buy this stock. But if you like your healthcare stocks and you go like I'm gonna hold for 20 years, then maybe that'll be fine because like I'm not a fan of buying stocks that price in too much success. It kind of just means like there's too much chance for failure and the price dropping. And the question is like, where would you see the stock price going? Like, say you buy it today, and it continues to do this well, and then where do you think this is going to go? Like, it's already at a 7.8 billion valuation. Do you expect it to go to 10 billion, 12 billion, 15 billion? So that's the thing. Like, even if there's an upside, I wouldn't say the upside's like that much more. Like most of the upside's kind of been priced in. So that's kind of what makes it very difficult. Like even I'm kind of like trying to look at this and trying to get my mind to like around it and going, it could potentially be good value, but no, like there's like at the end of the day, like there's so many different opportunities out there that you don't have to choose this one. Like you can find other stocks that have better value. Like this is pretty hard to justify actually. So I mean, of course, it's a healthcare stock. Like what they do is, like they might not have that many competitors in their space, but still, like at the end of the day, like you invest in a company because you expect, positive future cash flows. But the thing is, this company isn't showing positive cash flows yet. Like you're still losing about 56 million. And say like next year it gets well, like next year it could get to like 300 million in revenue, if it can grow like 100%. So like if we were to put in the scenario of 300 million revenue, um, I'd still be pretty hesitant in a way because like unless their margins start to show like some good increase, because they went from 50 million to 123 million, so that's an increase of about 73 million, and that's only the losses only dropped by 9 million. So I'd say the best indicator is seeing this loss kind of like drop a lot more, because like at the end of the day, like you want to know that this company's margins are going to really come through. Like it could be like this, its value, it's justified if the margins are really good. Like they have to be extremely good. But I'm not seeing that right now. I'd say assess the stock as it comes along. But yeah, I'd say currently I would say it should be a no go. Like I'm not too sure what scenario kind of justifies buying this over any other market like stock out there. Like there's a lot of stocks out there that are really good value. This one just doesn't happen to be that good value. So hopefully that answers your question. And yeah, like I don't think I can give you like that much opinion apart from I wouldn't be an investor in it, personally. And I generally but for me, I tend to be like pretty ambitious. I want like these high growth stocks at these really good prices. Whereas, like I love the growth rate. The company is like a great company. Like I love the company, just don't love the price tag. So like that's the thing. Like sometimes a company can be really good, but if you can't get at the right price tag, it's no point. Not worth the risk. So I'd say yeah, like I'm probably with you on the same boat. I don't see how this valuation is justified, even if analysts are saying it's justified. All it takes is a mistake or a recession, and you could well buy this like company at a cheaper price. Like buy it at $30, $40. If it never comes along, don't worry. If it does come along, keep it on your watch list. And if it does come along, it's possibly worth buying. Until then, well, good luck investing and hope that helped.